I'm here with Brad Case, NAREIT's Vice President of Research and Industry Information. Brad, we're seeing a number of IPOs now of new REITs being formed to use funds to invest in commercial mortgage-backed securities. What is the reason behind this happening now?
Well, the short answer is that investors right now have access to very, very attractively priced real estate assets, both buildings and, in this case, commercial mortgages and mortgage-backed securities. And so investors are trying to take advantage of a very similar situation to the one that we saw 18 years ago, in the beginning of the 1990s, when there was a series of new REITs, new publicly traded REITs formed through IPOs for the purpose of investing in real estate assets that were also very attractively priced back then, the beginning of a long bull market in publicly traded REITs.
Great. Now, Brad, these assets have been available for some time. What is the reason behind the action taking place currently?
Well, I think it's a confluence of four factors. One of them is the fact that there are investment managers who understand how to evaluate the risks that they take on by investing in commercial mortgages as well as commercial mortgage-backed securities. But those investment managers haven't had access to capital to make those investments. Capital in many parts of the market has shut down, but what we've seen in the last few months is a surge in security offerings in the publicly traded REIT industry. REITs have issued more than $18 billion of securities this year. And so there is clearly capital to be invested in attractively priced real estate assets, just not through private vehicles, instead through publicly traded vehicles. And so by doing an IPO, becoming a publicly traded REIT, those managers have access to that public equity capital. Another factor is, of course, the fact that the federal government has been working very hard to come up with creative ways of enticing investors to make these investments, the TALF program and the PPIP program. And so although those assets sort of have been available, right now there's the method through the federal government programs for those investment managers to make those investments at very, very attractive prices.
Okay. And you touched on this a little bit, but why are these investment managers choosing to structure themselves as publicly traded REITs as opposed to a private equity fund or another option?
Yeah, well, one of the most important factors is, as I said, the access to public equity capital. It's really the only part of the market where investors are really confident in placing new money is through publicly traded companies such as REITs. A lot of that has to do with transparency. Publicly traded REITs are really the most transparent possible way to invest in commercial real estate assets, including mortgages as well as buildings. And investors have the confidence to invest in those assets as long as they have the transparency that goes with it. Another factor, of course, is that REITs are required to distribute at least 90% of their taxable income in the form of dividends. And that means that the dividend income from REITs is very strong and a very strong advantage for many investors.
Great. Brad, sounds like a very interesting trend that we'll have to follow.
Very much.
Great. For REIT.com, I'm Matt Bishop.